Hello and welcome back to the channel. I'm Algabot, your guide to the world of automated trading on MetaTrader 5. Today we're breaking down a pure price action expert advisor called the Imbalance Magnet Reversal. What makes this one unusual is that it uses no traditional indicators at all. There are no moving averages, no relative strength index, no Bollinger Bands, nothing. Instead it reads raw market structure. It fades clean rejections off swing support and resistance, and it aims at unfilled fair value gaps. By the end of this video, you'll understand exactly how it spots a setup, where it enters, where it places its stop, and how it chooses its target. Let's dive in. Let's start with the big picture. The Imbalance Magnet Reversal is a counter-trend, mean reversion strategy that leans entirely on raw price geometry. It marries two well-known footprints of the market in a clever way. The first is swing support and resistance. These are horizontal levels harvested from confirmed fractal pivots, a high or a low that tops or bottoms a set number of bars on both sides. Because they are built only from closed bars, these levels never repaint. They represent the structural ceilings and floors that price reacts to again and again. The second footprint is the fair value gap, also called an imbalance. This is a three-candle vacuum where the middle candle moves so quickly that the first and third candles leave an untraded pocket of price behind. Markets tend to be drawn back to fill these voids, and that pull is the heart of this system. Now here's the twist. Most fair value gap systems enter inside the gap. This strategy does the opposite. The gap is not the entry. It is the magnet, the destination. The entry comes from a clean rejection off a swing level, and the gap becomes the target the trade is drawn toward. Every threshold in the system, from the touch tolerance to the stop buffer to the minimum gap size, is scaled by the average candle range. That average is computed inline from raw highs and lows, so the strategy adapts to any symbol and any volatility without ever needing to know the point size. It was designed with euro to US dollar and gold on the 15-minute chart in mind, but it runs on whatever symbol and time frame the test selects. This kind of approach suits a trader who is curious about structure-based, indicator-free logic. Remember, this is for educational purposes only and not financial advice. Let's walk through the exact logic step by step. The expert advisor only acts once per freshly closed bar, so it ignores the noise inside a forming candle. Before doing anything, it makes sure there is enough history to scan, confirms there is no position already open for its magic number, and checks that the spread is not wider than the maximum you allow. Next, it measures volatility. It sums the high minus low range of every candle in the lookback window and divides to get a plain average candle range. This single number scales three thresholds: the touch zone, the stop buffer, and the minimum gap size. Then the strategy harvests its swing levels. For each candidate bar, it checks whether the high tops every neighbor within the pivot leg on both sides, which marks a resistance, or whether the low bottoms them, which marks a support. These confirmed pivots become the ceilings and floors. Now it examines the just closed candle, the signal candle. For a short, the candle must be bearish, closing below its open. The strategy looks for the lowest resistance level that the candle's wick reached up into, yet the body closed back below. That proves the ceiling held. The entry is taken at the bid. The stop loss is placed just above the level or the candle high, whichever is higher, plus the buffer. The risk is the distance from entry to stop. The strategy then searches for the nearest unfilled fair value gap that sits entirely below price. The near edge of that gap becomes the take profit. It calculates the reward as the distance from entry down to the target, and only proceeds if the reward divided by the risk meets your minimum reward to risk setting. The long side is a perfect mirror. The candle must be bullish, wicking down into a support level but closing back above it, proving the floor held. The entry is at the ask, the stop sits below the level or the candle low minus the buffer, and the target is the nearest unfilled gap above price. Once an order is sent, the structural stop and the magnet target manage the exit on their own. One trade at a time, every threshold adapting to the market. Let's read through the code as you'd see it in MetaEditor. At the top are the inputs. Lots is the order volume. Pivot leg is how many bars on each side are required to confirm a swing pivot. Raise it, and the levels become rarer but stronger. Senior lookback controls how many closed bars are scanned for those levels and for the volatility scale. Touch zone frac sets how close the wick must come to a level to count as a touch, expressed as a fraction of the average candle range. GapLookback is how far back the strategy hunts for an unfilled gap, and MinGapFrac filters out tiny noise gaps. Stop buffer frac pads the stop beyond the level. MinRewardRisk is the gatekeeper. The setup is skipped unless the target is at least that many times the risk. And MaxSpreadPoints blocks trades when the spread is too wide. Now the signal logic for a short. The first line checks that the closed candle is bearish, with close below open. Then it calls lowest resistance held, which returns true only if the candle wicked up into a resistance level but closed back beneath it, the ceiling that held. The entry is red from the current bid. The stop loss is the higher of the level or the candle high, plus the buffer, so it sits safely above the rejection. Risk is simply stop minus entry. The strategy then asks nearest unfilled gap below for a target. Finally, only if the reward divided by risk clears MinRewardRisk does it fire the sell order, attaching that stop and that target. The long side mirrors every line of this. Let's watch this play out on the chart. Notice there are no oscillators here, just structure. We have a swing support drawn in green near 1.0830, a swing resistance in red near 1.0900, and two blue zones marking unfilled fair value gaps, our magnets. Watch the first few candles drift down toward support. On the fourth candle, price spikes below the green level with its wick, but the body closes right back above it. That's the rejection the strategy waits for, the floor held. A buy entry fires near 1.0842, and the stop loss tucks in just below the candle low and the level. Now follow the target. The nearest unfilled gap above is that lower blue zone, so the take profit is set at its near edge around 1.0868. Over the next two candles, price is drawn up into the imbalance and tags the take profit. The long is complete. Now the mirror image. Price keeps climbing toward the red resistance. On the 11th candle, the wick stabs above 1.00, but the body closes back below it. The ceiling held, so a sell entry triggers near 1.0890, with the stop loss placed just above the rejection high. The magnet this time is the lower blue gap, so the take profit sits at its upper edge near 1.0866. Price slides back down into that void and reaches the target. Two trades, both fading structure toward an open imbalance. This is an illustration for educational purposes only. So there we have it. Today we explored the Imbalance Magnet Reversal, a pure price action expert advisor that uses no indicators at all. We saw how it builds swing support and resistance from confirmed fractal pivots, how it waits for a clean rejection off those levels, and how it fades that rejection toward the nearest unfilled fair value gap, with the stop tucked safely beyond the level and the reward to risk filter, keeping only the cleanest setups. We also walk through the inputs and the core code so you can see exactly how it makes decisions. Remember, everything here is educational content only and not financial advice. If you found this helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and drop a comment with the strategy you'd like me to cover next. Learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.